Salam, TAETB. Good morning and good wishes to all. Welcome to One Wealth Outlook and OCBC NISP's third market update for March. My name is Sagar Kasuma, and today I'm here to give you our views and analysis on global markets and the state of our economic recovery so far to help you make the best investing decisions. So let's take a look. Right now, investors in equity and bond markets have their eyes on central banks, particularly the US Fed, looking for direction and where to go. Although all three US equity indexes ended last week in the green, marginally for some, last week the MSCI Emerging Markets FX Index suffered its longest weekly decline since August 2019, with the Indonesian rupiah continuing to weaken since mid-February, sitting above the 14,400 level numerous times in the past 2 weeks. US dollar-denominated debt in emerging markets also had its worst run in 5 years. There have been worries that increasing commodity prices and higher US Treasury yields may pressure central banks to begin easing up monetary support earlier than expected. Now, central banks have the unenviable position of walking a fine line between acknowledging that economies are improving, most notably the United States, with its incoming $1.9 trillion of fiscal stimulus, but also remain sufficiently dovish to ward off market speculation that a taper of its bond purchase program or earlier than expected rate hikes are on the horizon. So, let's take a look at what's going on in equity markets lately. We're seeing a closer correlation in the past few weeks between rising US Treasury rates and pain or downturns in equity trades that were once favored and defensive during the pandemic, namely China and growth technology stocks. Sustainable technologies and new energy-based techs such as electric vehicle stocks have also taken some losses. This may be a sign of the broadening of the bull market and rotation between sectors, from growth to cyclical, with the Dow Jones Industrial surpassing the Nasdaq in performance year to date. The cyclicals and previously beaten down industries that understandably struggled amid the pandemic are catching a bit up as investors expect a rapid recovery in the latter half of this year. Even in Asia, we see a shift as investors begin to trim their technology-related holdings in favor of cyclical stocks in energy, financials, materials, and even airlines. Now, as of now, S&P 500 companies have mostly reported all their earnings. So, what we're going to be looking out for in this gap period between earnings season is the macroeconomic data prints to see which direction equities may go. In Indonesia, analysts are expecting continued strength from the Jakarta Composite Index in the next 1.5 years. Perhaps one could consider diversifying into other markets that remain at a relative discount when you consider the historically elevated price-to-equity ratio of US markets. Now, we assume 1.5 years before more volatility sets in as investors begin to look at the 2024 US and Indonesian presidential elections, double risk events, often a source of volatility. The last US election saw the Chicago Volatility Index spike as far as 40.28 in the days leading up to the election. The long-term average value of the VIX was between 20 and 22. And a quick note on gold. Finally getting some respite. Gold rebounded 1.6% last week and traded comfortably around the 1700 level. This month, our analysts have actually downgraded their year-end estimates for gold from the 2000 level and above to the 1600 to 1900 range. However, further declines in Treasury yields could lift gold prices higher. For the rest of this update, we will be focusing on Indonesia and the state of its economy. As it stands, most countries, Indonesia included, have still yet to fully recover from the pandemic. Its economic recovery needs an effective vaccine rollout and confident reopening. After recent moves, the Bank of Indonesia will be trying to stabilize the rupiah and stem the current outflowing of foreign portfolio funds. In the short term for this quarter, we still expect Indonesia to grow by 0.5% and for the full year to grow by 4.9%. Now, this is in line with government forecasts, which lie in the 4.5 to 5.3 range. However, our updated estimates were actually expecting a more muted bounce back as a result of weak activity in the final quarter of last year and continued challenges in opening back up. The data shows a mixed picture, as consumption appears like it is yet to pick up, The Google Mobility Index shows retail and recreation still at 18% below the historical baseline. Even though shopping centers, restaurants, shops, and the like have been open for several months, activity there and also in transit stations are down. Transit stations down as far as 34% below the baseline. But longer term, it does look like this year will mark the start of a recovery process for Indonesia. We should be on guard later on in the year, as coming into 2022, there may be risks arising from the end of the loan restructuring grace period for businesses. As we have said previously, the key to a strong turnaround in Indonesia is getting the coronavirus situation under control through relative herd immunity. The government has made it mandatory for all eligible Indonesians to take the vaccine, with the goal of inoculating over a third of the eligible population by Q3 this year. Indonesia also authorized one of the world's first private vaccination programs last month, allowing private companies to buy state-procured vaccines for their own staff, hastening the deployment and allowing for private businesses to get back to normal sooner. This pandemic has taken a lot from us. From some of us, everything. There's been tremendous suffering around the world, and lives have been lost and many changed irreparably. But if we are to try and see a silver lining, we are seeing an acceleration in the adoption of technologies and the realization that they can help improve daily lives. Before the pandemic, the 2017 Digital Evolution Index categorized Indonesia as a breakout country with a relatively low but rapidly improving digitalization. The pandemic, out of a pressing need, has supercharged that transformation in a number of sectors. Suppose we can make the best out of this current situation, then Indonesia has all the ingredients to rise out of this pandemic stronger than before, having also passed an omnibus bill that serves to increase ease of doing business and encourage foreign direct investment. But again, execution of current initiatives and follow-through will be key. From us, that is all for today. I am Sagar Kusuma, wishing you a lovely weekend, and this has been OCBC NISP's One Wealth Outlook Weekly Update. For more updates, you can access our market journal below and follow us by clicking subscribe. Salam TTB.